In this video, I want to talk a little bit about a scalping or a day trading strategy that's very popular, something I like to do, and I'm going to show you a little trick. Now, it's not exactly a trick because it's really quite well known across the industry, but a lot of people have a tendency to forget it, and they don't apply it to their day trading or their scalping strategy. So this is just a couple of markets that I picked up this morning, and I want to show you how I found those and then how we traded them. Now, the first thing I want to show you is just, there's these three markets in particular, but we have a watch list over here. And on this watch list, I have a whole bunch of stocks. And how did we come up with this list of stocks? Well, many of you know that I like to look at bar chart. Now, again, bar chart is a company that I really love, but I have no association with them. If you buy something from bar chart, I don't make any money. So we're going to come in here, and I like to go through the different reports that they have on here. I like to go through the first ones they have in here. I like to do gap up and gap down. So I like to look at the biggest moving markets, the ones that gap up in the morning. I also like to look at the today's price surprises. Those are really good ones. And then I have in here a little stock screener I've created for a momentum stock. And so I like to look at those. And then what I'll do is I'll take those, and what you find is that when you go through these different lists, that the same stocks have a tendency to kind of percolate to the top. So you end up with kind of a nice list across the board of a lot of real active stocks. And that's what we're looking for when we're day trading or scalping in the morning, is we're looking for the really super active stocks, right? So this is the list I ended up with this morning. And as you can see, we've got a bunch of day change stocks in here. And this is the change from yesterday's close. And then this change line, this change column, you can see you can set that up in your column settings. But this change column is from today's open. So I want to see how much it's up from yesterday's close versus today's open, because oftentimes we'll get big gaps, right? One of the reports that we do over on the bar chart is gap up and gap downs. So we're actually looking for markets that have gapped up. Those are markets that a lot of people are looking at, they're very interested in, and that's why they gap up. But oftentimes the market will gap up and then it'll flush right back down. And so that's why you have something, like, this row of columns in here. You see, like, this one gapped up 0.29%, but now it's down 0.40. Or this one gapped up 25%. It's up 25% from yesterday's close, but then it's down from today's open. So it actually just kind of went sideways. And you'll see that oftentimes. You'll see, like, this one here gapped up 17%, but now it's down 2% from the open. And so that's kind of a neat little trick that you can use in track and trade to kind of see the differences between the two. And of course, what I like to do is sort by the change and bring all the highest ones to the top. And then, of course, this is the one I'm going to be interested in. Now, I like to watch 4, 5, or 6 different markets at the same time and see which ones they're doing. Cut your losers short, let your winners run, right? So if we only pick one stock, well, we're kind of myopic in our trading. We want to have 4, 5, or 6, and sometimes more, depending on what the list looks like. So we'll pick a series of stocks, right-click on it, and say Open Chart, and we'll open up all those charts and watch them simultaneously. Now, whether you want to watch them on a 5-minute time frame, a 1-minute time frame, 15-minute time frame, it depends on the strategy that you're trading, right? So I'm going to come over and I'm going to show you some of these that percolated to the top this morning and show you how they turned out and show you this little trick that I have when I like to get into these markets. So the first thing I'm going to do is just come down, and these are the 3 that percolated to the top this morning. And I'm going to start with NEO in here because it was one that kind of hit the little trick very nicely, but then didn't have any follow through. So we'll start off with the worst, and then I'll go to the best ones after that. So hold your horses. I'm going to show you the best ones and what they did this morning. But I'm going to come in here, and the first thing we do, this is the morning session, right? This is the first opening bell, and the market takes off. Now, this is what everybody's looking for. All the scalpers and all the excited traders, they're looking for the first thing this market. I call this a jump and run. A lot of people call it a gap and go. But you can see this market took off and run first thing in the morning up to its high. So the market opened up. Everybody's excited about this stock, and up it goes. And this is where you get a lot of scalpers and a lot of day traders trying to scalp into this market and take some profits out of these trades. It's really hard to trade like that, but it's really fun, and a lot of people like to do it. So I'm not telling you not to do that, but it is difficult. And keep in mind that most people who do that type of trading or scalping on these really very early morning types of trades and just try to take little pieces out of the market lose money. There's a little bit better way, in my opinion, and it's the way I like to do it. I have a little bit better success than trying to scalp out this first morning thing. Not that I don't try on occasion. I do. It's fun. But I have greater success if I use the Fibonacci ruler. Now, think about the Fibonacci ruler. This is my little trick, and it's like, oh, well, that's no trick, Lamb. Everybody knows about Fibonacci. Of course, everybody knows about Fibonacci. That's why it works. Okay, a lot of technical analysis works because there's so many people who believe in it. It's almost self-fulfilling prophecy. So let's come in here and draw a Fibonacci ruler. And you say, well, this is what everybody's doing. Everybody in the whole in the whole market is drawing their Fibonacci rulers across this early trend. Yes, that's true. That's exactly why it works. So we're going to come in here, and you see this market took off. It ran up this morning, it peaked out and started to fall back down again. Well, that's where you draw your Fibonacci ruler, from the bottom to the top. That's pretty standard stuff, right? And then you'll see that this market fell right back down, hit the 38.2, bounced, came back up, made this little 1, 2, 3 or ABC top formation, we call them, right? And then it had a projection down to 130.9, which is the 61.8 projection level on the Fibonacci ruler. So look at that, pretty, almost like a train on rails. It had a little ABC in there, which is normal, right? And those of you who have followed me, you know that markets don't go straight up and down. Well, in the morning sometimes they do. But then you see this market came down, made a little jig here, and then followed right back down to 61.8. Now this is where I like to come in and be a buyer. So I'll play around in this on occasion. It's fun to get in and try and do this little scalp and catch this run up here first thing in the morning. But the problem is you don't know how high it's going to go, and you don't know if you're buying high and expecting to sell higher, or if you're buying low and expecting to sell high. It's a little bit difficult to catch that first run. So we get this little retracement or this little pullback, and this is really common. Now, it doesn't happen in all stocks, but those are not the ones we're going to be trading. We just want to trade the ones where this happens, right? I mean, we wait for this pattern, and it doesn't happen on all of them, but it happens often enough that it's something we can trade. Now this market ran up, came down, hit this 61.8, so that's where I put in orders and start to become a buyer at 61.8. And this is where we'll do our, a little bit of what I call the cat's meow, and we'll do a little bit of dollar cost averaging right in this region here, trying to pick up our position, build our position. And if you're not familiar with the cat's meow or the king tut or some of my different strategies that I use for entry, let me know. I have a booklet that I'll send to you, give you the link that you can go pick that up. Most of you have that, so just look those up, and those are some of the strategies. The Christmas tree strategy works well here. The intercept order strategy works well here. But this is where we're going to start picking up some positions around 61.8. You'll be tempted to kind of come in a little bit early. Sometimes, like right in here, the market will come down to 50% and start to rally, and you can oftentimes pick up a little bit right in there on a bounce off of the 50% level. But I like to wait to 61.8. It's a little bit higher probability of being successful. You don't get as many trades, but the ones that you do get, more likely to be successful. So I like to do the 61.8. I like to wait in here. Sometimes I'll get in a little bit early, maybe do the Christmas tree strategy down to 61.8. And then, if the market continues to trail, this is my ripcord. I kind of get out right in here around 78.6 or right in this region. If it's not holding the 61.8% level, that's where I just kind of bail out and take my loss, cut my losers short, and then let my winners run. So again, I'll be trading multiple markets. So the ones that don't work out, I cut, and the ones that do work out, I let run. And so this is where we kind of bounce off the 61.8. Now this market didn't work out, right? It kind of bounced off the 61.8. It rallied up a little bit, and then it just kind of died off. So let's go look at AYRO, and then we're going to look at plug. So we're going to come into AYRO. Now this one took off like a shot. So let's come in here, and we'll stretch this out and give it a little bit of a room in here. But this is basically the same pattern we just looked at over in NIO, right? So let's come in with our Fibonacci ruler. We got the opening bell right here. The market rallied up just like it did before, first thing in the morning, rallied all the way up. This is where everybody's getting excited, and they're buying the market, and they're getting all excited. And then, of course, we're smart enough to watch the bulls and bears, and we're watching the blue light system. And this is where we're going to say, oh, it's not going to go any higher. It cracked that 23.6% level, as well as the blue light at the same time, and that's kind of our downside potential. So the market came down, it held that 38.2% level, started to rally, but it didn't hold again enough, and then it cascaded all the way down to where? 61.8. Right in here, this is where we start becoming a buyer, right? We want to start adding on to our positions and start building up a position at 61.8. And we can start at 50% if you want, and then kind of put some limit orders in there all the way down to 61.8. So when it gets down to 61.8, you got your full size position. And then at that point, you got to stop down in here in case it just continues to cascade down and get yourself out. But then this is where we become a buyer, and then the market starts to rally. And then we follow the bulls and bears, and notice that we have an additional buy signal here, or an add-on to your position right here. So we're long here, we ride it up, comes back against us a little bit. If you want to take a little bit of profit in there, you can, but then we can add on to a position when it crosses the blue lights, and up this thing rips again, and then you'll notice the blue lights trailed all the way up, and this is where we put on our cat's meow, and we can come in and we can add on trailing stops all the way to the top, and then this is where we get out as it breaks. So that was a beautiful trade this morning that we were able to pick up off that 61.8% retracement. And that's, again, where we want to start adding on to our position. Now, again, I'm not saying you shouldn't trade this early morning, first thing rally in the morning. You can. It's fun, but it's a much more difficult time to trade, in my opinion. This is a little bit easier for me. I've had better luck doing this strategy than I have first thing in the morning, and this is where we'll pick this up and get this longer run. So let's come in and take a look at plug. We're going to do the same thing with plug. This is first thing in the morning. This is the morning bell. Let's draw our Fibonacci ruler in there, and we draw it up to the peak, and we come out, draw it across there. You can see the market came down, bounced off the 50% level, held that, went up, hit the 23%, 6, dropped all the way back down to 61.8, held that 61.8% level just beautifully with lots of support right across there. That's where it started to rally back up again. We got the exact same pattern as we got over on AYRO, where we got another additional add-on position right in here, and up this market went. Now this one broke here, gave us another add-on position here where we could get in with a few more shares, and then this one came in and gave you another add-on position here, and then of course that's our Elliott wave 3-drive pattern, right? Once we get 3 drives, we want to get out of this thing. So we have drive 1, we have our second opportunity, it came in there, drive 2, and then our third little drive right in there gave us the third drive to the top, and that's where we want to be done. Whether it goes higher or not is irrelevant to us. This is our strategy. If it continues higher, well, you know, we don't be buyers at the top of a third drive. Now you got the bulls and bears in here, of course, helping us make our decisions. We got a nice little buy signal off of this yellow changeover from yellow to green. We got the breaking of the blue lights where we can add on to some positions, so it gave us some additional help in here that we can use and watch for. But this nice little 61.8% pullback right in here, this has been my best trigger, my best setup that I've had the best luck with, and we'll ride this thing back up using the bulls and bears to get us up into that third drive pattern, and then this is where we get out. Again, whether this thing continues higher or not is irrelevant to us. We've got our trade, and we've made our trade up through that 3-drive pattern. Doesn't always happen as a 3-drive pattern, as we see back in here. AYRO took all the way up and didn't even break all the way, so we had some good runs right off of that 61.8% bounce. All right, guys, that's just something quick I wanted to point out to you. Keep that in mind as you're doing your day trading and your short-term position trading. It also works on the 5-minute chart, obviously, and the 15-minute chart and the daily charts, and it's just something that we do. And remember, this is also the where we're looking for the different patterns, like the bow tie pattern and the butterfly pattern. And so keep those Fibonacci numbers in mind as you're doing your day trading as well, because people do watch them and they do adhere to them and they do use them in their trading. And so the more people who are using them, the more likely they are to hold those positions and give you the opportunity to take advantage of them. So take care.